Alright guys, today we are going to talk about ITC. Basically, we are going to do a very small stock review of ITC. Now, it's very important for us to understand that Parag Parikh Mutual Fund is heavily invested in ITC. So, the big question is why Parag Parikh Flexi Cap Fund is heavily invested on ITC. That's what we are going to explore in this video. Before we start, we need to understand why people hate ITC. Now, this is the stock chart of ITC and I have compared with its benchmark, which is Nifty 50. So if you see the price movement of ITC, you can see from 2015, from 2010 or 2005, you take any time frame, you will see that ITC has underperformed Nifty 50. So no wonder people hate ITC because it has not given any return. For example, if you are invested in ITC in 2015, right now it is trading at the same price, means there is no return in last 5 years from ITC, right? So this is one of the reasons people hate ITC. Now, on the other side, Parag Parikh Mutual Fund, which is very famous, especially for the retail investor, for that unique style of value investing. Parag Parikh Mutual Fund is investing not only in India, some portion of their fund in foreign countries, for example, USA and Japan. Now, 35% of their allocation remains in international stock market, while 65% of the investment remains concentrated in India. So in this, you can see their Indian portfolio, Indian investment. Approximately 23 stocks they hold in their entire portfolio. And what you see on the screen on the left side, this is basically their Indian portfolio holdings. You see very top name is ITC and 7.97%. So ITC is holding almost 8% of Parag Parikh Flexi Cap Fund. It's a very high exposure. Now, if you connect this to ITC has been most hated stock for last 5 years or 10 years, for example, and Parag Parikh Mutual Fund is investing in this. So why exactly they're investing? So if you see or try to understand what happens to the hated stock, it's very interesting. Like when a stock is hated by a lot of people, what happens? The valuation goes down. Now, if valuation goes down, two things can possibly happen. The first is it could be a value trap. Even though the valuation is lower, the stock will not give return. So that's kind of a value trap. On the other side, you may find a bargain. Since everybody is selling the stock, the valuation is low. It may so happen that you can find the stock at a very cheap price. So for ITC, we really do not know which category does it belong to, whether it's a value trap or bargain. Only time will tell. So let's just focus why ITC has underperformed. Now, to understand that, we have to have a little bit of overview of ITC business. Their major revenue contributor is cigarette business. Now, cigarette business is a very profitable business for ITC. So every year they earn a lot of money from cigarettes. And cigarette business does not need a lot of reinvestment. So whatever profit ITC earn, what ITC do is they invest in different other business. For example, they invest in hotel business, they invest in FMCG business, right? So if you see, their hotel business is not profitable and their FMCG business was also not making any profit since last year. So cigarette business, which is profitable, they're gushing out the money and putting it where the money is not basically giving any return. That is one of the major reasons why ITC has been underperformed. Now, if you see the big picture, what ITC is trying to do is very interesting. ITC is trying to establish their brand in FMCG. Previously, it was just confined in the cigarette business. So they're taking out the money from that and they're trying to build FMCG brand. Okay. Now, building FMCG brand takes a lot of time, and in this time you will actually not make any money. So first few years, not few years, first it may happen for a decade that you will not earn any money. It will take all the advertisement, all the effort to set up the brand. So in this time, you'll not make any money. But once the brand is established, it would be easy to slowly make profit. So initially, it takes a lot of pain to build FMCG brand. Now to give you the context, how old the FMCG popular brand we have in India, let us take an example of Dabur. Dabur was one of the most oldest brand in India in FMCG space. It was established in 1884. Guys, 1884, it's a century old brand. Hindustan Unilever, 1931, almost 90 years of brand. Very recently founded, which is Marico. It's basically a brand of parachute Caroel. That was also 30 years old. So basically FMCG brands requires a lot of time to gain trust from the customers, right? So now if we see the valuation of Hindustan Unilever, Marico, Dabur, it's very surprising that they get a very high valuation because they're FMCG brand, right? So they get above 50 P multiple. If you see for ITC, it's getting only P multiple of 19. So you see, it is still not regarded as FMCG brand because it has not been established player yet. So over the time, what ITC is trying to do is to set up the brand. Once the brand is set up, the market will slowly realize the potential of ITC and give higher multiple. And when that happens, the value unlock will take place. So basically, if you see from Parag Parikh Flexi app one point of view, they are very good at holding a stock for a quite long time. So basically, it's a waiting game they're playing. They're buying it at a very cheap price and they're waiting while ITC establish their brand, and when it happens, they will get a good return. Well, that's not all. There is another brilliant move in this. So while they wait, it is not that they're losing everything. ITC is giving a dividend of 5.5% almost. So every year, it is giving a very high dividend. While waiting, you get the dividend and wait for the value unlocking, right? So basically, it's a brilliant waiting game. I hope you found this information interesting. Thanks for checking out this video. I'll catch you up in the next one.